Listen carefully. Crypto is in the zone where most people panic sell and smart money are quietly positioning. We see the fear and greed index sitting at extreme fear. Altcoins are down 50, 70, even 90% from the highs. And while everyone is focused on the drama, the real story is that inflation just reaccelerated at the producer level. Liquidity is rising, but Bitcoin hasn't caught up yet. And we've seen this exact setup before in 2015 and 2020. So the question is simple. Are we looking at the start of a deeper crash or the setup for the next major Bitcoin leg? So let's break it down in this video. We'll start with the inflation data, which was just released today. The PPI, the Producer Price Index. This is inflation at producer level. Think of it like if producers are paying more today, consumers usually pay more tomorrow. So the PPI is basically a warning signal, and the numbers came in hotter than expected. If you look at the statistics, we had 2.7% expected, it came at 3%, and the core PPI 3.3% versus the 2.9% expected. That's the year to year, and month to month was also higher, as you can see. And the month over month core number is the real problem. Because when markets see a 0.7% monthly core print, they don't say, nice, inflation is under control. They say, oh, wow, inflation is sticky again. And this changes everything. So when inflation comes in hotter than expected, market instantly price in fewer rate cuts, delayed easing, higher for higher conditions. And that's when the pain starts. Because crypto, especially altcoins, is basically a liquidity market. Altcoins don't pump because fundamentals are amazing. Yes, fundamentals matter, but they don't do anything on their own. Altcoins pump because money is cheap, risk appetite is high, liquidity is expanding, leverage is flowing. When the market starts thinking less cuts, leverage exits first. And that's exactly what we are seeing right now over the past couple of weeks, even if you wish months. And something more bullish, earlier this morning we had the new Fed chairman. Trump nominated Kevin Warsh as the next Fed chairman. And if you don't know who he is, he's the former Fed governor, a known advocate of strong credibility and inflation control. And he's considered more market aware than many other traditional Fed bureaucrats. So this is an important change, and of course he was chosen by Trump, who has been asking for rate cuts for ages now. We'll see how the PPI data gets interpreted now and what steps the new Fed chair will take, but in my opinion this is a very, very bullish step for the crypto markets. And something positive, which is linked to what I'm going to tell you next, related to the altcoins. I know all of you are holding altcoins, and right now we see Bitcoin trending at the 82k levels, dropped even below that, and the altcoins are in a bloodbath. If you look at the statistics here, I got this figure for you to show you the US coins 1 year after Trump inauguration, and this is brutal chart. You can see XRP, Solana, Link, Sui, Avalanche, HBAR, Ondo, Aptos, Tia, Uniswap. All the good projects are down between 30 to 90%. You can see the statistics. You've got Solana 50% down, you've got Sui 70%, Avalanche 70%, Ondo nearly 80%, Aptos more than 80%. You've got Tia 90%, huge drops. And this is what a bear market risk off cycle looks like. This is why 90% of the retail investors get wiped, because they buy narratives at the top and then they hold during token unlocks, hit, insiders exit, macro titans. And by the time we realize what's happening, these altcoins are down by 70%. I don't say that they won't recover, but it is quite painful to hold through these moments. And we can see the statistics. We were all expecting 2025 to be very bullish according to the 4-year cycle that we've seen before, but this time the cycle is not what we've seen before, and I'll talk about it shortly. Most altcoins are not investments, by the way. They are trading instruments. Even good projects can drop 70 to 90%, as we see here on this chart, because of VC unlocks, lack of liquidity, market cap illusions, hype cycles dying, and of course liquidity leaving the market. So if you're holding altcoins right now, I want you to remember one rule. Don't marry altcoins and you rotate in and rotate out, because altcoins are designed to extract liquidity. And this is very obvious what we are going through now, because if we look at the crypto fear and greed index, it's at 15, extreme fear. And we've been in fear for months now, since even before October. And we don't stay in fear forever. We go from extreme to neutral, then to greed. It's a very simple cycle. So we are almost at the bottom of this extreme fear, of this downwards momentum. And you see what's happening during extreme fear. Panic is widely spread. Sentiment is completely washed. Selling is emotional at this point. And all the weak hands are exiting. And historically, extreme fear is where bottoms form. Accumulation begins and the next leg gets built. This is when people start thinking in probabilities and start thinking in emotions, and they exit, make emotional decisions. That's exactly where money is made. So if you're on my Discord, keep an eye on what we are buying, what we are selling, because now are the best opportunities before rotation from commodities start, before rate cuts begin, because before we see more liquidity being injected into the system, into the financial system. And I want to share with you this other chart here, Bitcoin versus global liquidity. That's a very important chart, because this gap in Bitcoin versus the GMI global total liquidity, we saw something similar in 2015 and 2020. There is nothing abnormal about this disconnect. Liquidity is rising and you can see Bitcoin is going down. So we see clear disconnect here. All you require at this stage is patience, because what we're seeing right now is that liquidity rises first and the market reacts later. Bitcoin is a liquidity sponge, but it doesn't always move instantly. Sometimes it lags, and that lag is exactly what we are seeing. The important part here is that we've seen this already in the past, 2015, 2020. The markets disconnect temporarily, it's not permanent, and then Bitcoin catches up violently, and this is very clear from the chart. This is why the setup matters, because it suggests we're not seeing something broken, we are just seeing a delay. And if you think that you need some kind of genius plan right now, you are mistaken. You need something very, very simple, a simple framework to follow, to stay patient, to focus on Bitcoin and top quality altcoins that you even saw, the ones that I shared earlier with you are more than enough. Avoid random hype altcoins, watch liquidity, watch the price action, and don't let fear force bad decisions. Because the biggest mistake you can make right now is selling the bottom right before liquidity catches up. So that's from me today. Thanks so much for watching. I'll see you in the next video.